nearly there. Yeah, that's it, I think. Yeah, okay, that's super. Yeah, I'm live and with you all now. That's great. Okay, a very good morning, good afternoon. Just looking forward to taking us through what we've got in this session. Of course, all eyes today are on the non-farm payroll. Big US jobs data is the key story. Just going to have a quick recap so we get the context of where the market is in. What we can see is we've seen some US dollar selling recently, and the selling has been on these risk-on flows. And essentially, the market has been focusing on these risk-on moves for three reasons. First of all, we had some positive data out of the US yesterday. Now, just taking a look at the ISM manufacturing data, we can see here that we had manufacturing PMI coming in at 52.6 versus the 49.5 expected. So that was a strong reading and a strong recovery for manufacturing PMIs. And we'd anticipated that a reading above 50, obviously everything above 50 shows expansionary territory. So that was the first bit of good sentiment that came into the market. And for those of you who are trading that, you would have noticed that the euro US dollar moved up and moved up to its first pivot point straight away, pretty much on that news that was released yesterday. We'd anticipated that a good number here would just play into that V-shaped recovery hope. Now, also the other the other point to notice about this data that was strong was the new orders. So nice new orders coming at 56.4, but the employment metric was slightly low at 42.1. So that was the slight, the slight sort of fly, as it were, in the ointment. But the general consensus here, that was a good, strong reading. So we had that piece of news. There's three altogether that have resulted in the risk-on sentiment. This is the first piece. The second piece has been the vaccine news. Just taking a look here, there was BioNTech and Pfizer COVID-19 vaccine shows potential in human trial. So this good potential news on a vaccine that's in the pipeline also added to the positive risk sentiment. And finally, we had the positive risk sentiment because of the stimulus hopes and the fact that the Federal Reserve from the latest minutes are keeping their eye on quantitative easing, keeping their eye on stimulus measures, and they're looking at, if anything, pushing stimulus measures further. So there were three things that supported the markets yesterday. And as a result, we saw US dollar selling, and we've also obviously seen the dollar pairs pushing higher, with the euro US dollar and the pound US dollar being the main beneficiaries. Now, as a result of that positive risk-on tone, the dominant currency sentiment that we had this morning, notwithstanding that we've got the US jobs data ahead, was a long from this 1.1250 region on the euro US dollar pair. Now, obviously, price didn't reach down into this area, and you could be forgiven for just standing aside, awaiting the key jobs data coming up. But that was the dominant currency sentiment. There's no point getting into this or looking at a retracement now. We're quite close to the jobs data. So jobs data is close, and we don't want to be getting into the market with these extensions to the high towards the R1 daily pivot area. So there's nothing to trade there now. I just wanted to highlight that as the dominant currency sentiment pair earlier this morning. Now, a couple of things to say. First of all, on this euro US dollar pair, there are a couple of large option expiries. There's one here at 1.1250 for $2.2 billion. And there's also another option expiry at the 1.1300 level. You can see that price moved into it and has just sold off from that large option expiry at $2 billion. So these option expiry levels are currently in play. So it's not a surprise that we've seen a little bit of selling off that key option expiry level, that would have been a key target for longs, and also the option expiry level. Option expiry levels often keep prices contained heading into the New York cut around sort of 3 p.m. UK time. So just to be aware, those two option expiry levels, we've essentially got them marked here on the chart, 1.1250 and 1.1300. Now, that is the euro, that is the, the positive outlook. There's one negative that the market is just not quite focusing on at the moment, but nevertheless we need to be aware of. And that, of course, is the rising number of COVID-19 cases out of the US. The US, some of the difficulties now for the US is that we have a situation where the US daily COVID-19 cases increased by over 50,000 for the first time. And we had Apple reclosing 30 stores in 7 states yesterday. And we've got the California governor who ordered 19 counties to close certain indoor operations, things like indoor restaurants and theaters. So that is a rising concern. And the concern is that if there's a massive new wave in the US, and the US is now in a second wave of COVID-19, that is exceeding the first wave of COVID-19, so it is significant. If this results in further shutdowns of the US economy, then the market will focus on that shutting down narrative, and obviously that will be negative for risk sentiment. So we have to bear in mind, no matter what happens today in terms of US jobs, that background story is still there. Now, at the moment, yes, the market is focusing on the economic recovery story for those 3 reasons we mentioned. Good ISM manufacturing PMI out of the US yesterday, vaccine optimism from Pfizer, and we've also had Fed stimulus hopes. That's the positive story. But we can't ignore, even though the market's ignoring it at the moment, we just need to be aware. So we're in a very sort of short-term perspective. As long as you've got that in your trading, then that should really help and keep a balanced view of any upcoming moves. So looking ahead, the main event is the non-farm payroll. So let's just take a look at what we've got here. Now, don't forget that with the non-farm payroll, this is very significant. The US is bringing in about a quarter of the entire world's GDP. In fact, let me just show you. I've got a little infographic here that I like because it really shows global GDP. So you can see here around a quarter of the entire globe's GDP comes from the US. And that US market, 70% of that GDP comes from the US consumer. So the US is a consumer-driven economy. And of course, consumers can only spend when they've got jobs. So that is why we're in a situation where the US jobs market is a key focus of the market. Now, don't forget that even if we get a very good jobs data report today, we've still got the rising COVID-19 case story going on at the moment. So we just have to keep that in balance with what happens later on. But the increase that's expected is a 3 million job increase. Now, last non-farm payroll surprised everyone. I don't think there was hardly anyone who was expecting an increase in jobs for May, and yet there they were. Now, there's another increase expected for jobs in June of 3 million. And the expectations are still quite wide, somewhere between 500,000, just under, and 9 million to the upside. So this will be the most significant data point today, most likely. Don't forget, alongside the non-farm payrolls, we also have continuous claims and initial claims. So we'll come on to those in a minute, but the non-farm payroll is likely to be the most significant headline figure. Couple of things to note. The unemployment rate will be important. A little observation, notice the difference between the unemployment rate in Europe and the unemployment rate in the US. Unemployment rate in the US expected to be 12.3%, was 13.3% last reading in May. Current unemployment rate in Europe is 7.4%, and that's, you know, a slightly better than expected reading, and that's obviously strong for Europe. If they can keep that unemployment rate much lower than the US's unemployment rate, that's positive for the euro, particularly if the US is in a worse situation regarding COVID-19. That would support euro US dollar upside medium term. That's just a little observation that you can see here. So look at the unemployment rate carefully for the US. Minimum expectation is 10.1, maximum 15.5. 10.1 and below would be bullish for risk. 15.5% above would be bearish for risk assets. So bear that in mind alongside the headline figure, of course, which will be in clear focus. This is the headline reading here, 3 million expected. Other significant areas, earnings and work week. A more bullish scenario is when people are working longer and more hours because, you know, they're obviously getting paid more. So you want to see earnings rising and work week hours rising for a more bullish outlook. So don't forget to don't just focus on the headline, also have a look at the other readings as well. So average earnings month on month, they are expected to drop again, minus 0.7%. And average earnings year on year expected to fall to 5.3% from 6.7% prior. Work week, again, expected to fall to 34.5 versus 34.7 prior. Here's the minimum and maximum expectations across the board. So that's what you've got as the backdrop. Now, although non-farm payrolls is going to be the main event, we also at the same time, so at 1:30, and remember the non-farm payrolls is only today because of the 4th of July celebrations in the US tomorrow. So as a result, the focus is likely to be off the initial jobless claims and continued jobless claims, but these are still important metrics. Now the initial jobless claims is expected to fall to 1.35 million versus 1.48 million last week. Now, this is expected to keep falling, of course, because as the virus carries on and states are slowly lifting, then people aren't expected to have initial claims. Initial means, the first, in other words, a new batch of jobless claims. That's expected to keep falling. However, the continued jobless claims is likely to be of more use because it tells us how many people are continually without a job. And obviously, the higher that number, the worse it is for risk. The lower the number, the better it is for risk. So the bullish scenario would be 18.4 million and below would be the more bullish outlook. 19.4 million above would be the more bearish outlook. So there's quite a lot to factor in at this release. You've got the non-farm payroll data, average earnings, average work week hours, as well as taking a look at the initial jobless claims and continued jobless claims. And the market's going to be sort of factoring all those in at the same time. So don't forget that dynamic is going on. So let's just run through. If we get a very strong reading, so if we get non-farm payrolls, which is above expectations, and obviously if it's above maximum expectations, that would be even more bullish. But if things are above expectations across the board, particularly the headline figure, unemployment rate, we'd like that to be lower than 12.3%, and then the earnings at least as expected, or a very small miss, that would be a bullish outlook for the NFP data. Then if we get initial jobless claims, if we get them around expected or below 1.35 million, that would be positive, and not below 19 million or 18.4 million would be positive. That would be positive for risk assets. The currency pair to trade is the euro-US dollar. We expect more dollar weakness. We've been seeing the dollar weakness on the risk on flows rather. So we'd expect to see more euro-US dollar upside. So just taking a look at the pivots, we have an obvious target would be for a bullish outlook would be just moving up here. So just into this descending trend line, that would be a key area here, this 1.1330 region. I think just that R2 pivot point would be an excellent area, because it's it's a area of confluence with these highs from the 23rd of June, R2 pivot point, and the descending trend line. So that's something to be looking out for. If we get a clear break at this level, then we could look at this level here at 1.1300-ish. We could be looking at here for rejoining longs back up to this 1.1330 level. So that would be on a bullish scenario. Okay, if we've got a bearish scenario, which would be if we got a bigger miss than expected, below 3 million, and if it was below 500,000 at 405,000 level, that would be negative. And then all of a sudden, for me, the highest conviction trade will be if we get employment data misses. Because we've got those big concerns about rising COVID-19 cases, if we see rising unemployment, if it's above 15.5%, or more, that would be very bad for risk assets. And if we got employment data below that 405,000 figure, that would be very negative for risk assets, as well as anything here with earnings and work week hours misses. And then again, if we got initial jobless claims, if we got them coming in above 1.5, anything rising above there, that would be alarming, as well as the continued jobless claims. If they were pushing back up towards 20 million, 19.40 and above, that would change risk assets. And we expect to see sharp sell-off in the S&P 500. So S&P 500 futures, expect to see a sharp sell-off in that currency pair. Also, you could potentially see a downside in the Aussie US dollar and Euro US dollar, and potentially Australian dollar Japanese yen shorts would be making sense in that environment. So a big data point coming out later on today, and one to be fully aware of. Another thing just to remind ourselves finally is that US holiday tomorrow. So if we do get a risk-off market, don't be surprised that flows could be accelerated today. It could be exaggerated today, because market participants want to be getting out ahead of the weekend. And also, you got to bear in mind, like we saw around February and March, when you had like rising cases, you've got to factor in 3 more days of potentially rising cases out of the US. So you could imagine that you might see some cases really ballooning over the next few days. So market participants might be aware of that, depending on what data we get. So even if we get good data, just to be aware that you could get it being sold. So even if you get good data, you can get a spike higher, and then price might drift off the highs. So don't be greedy if you do get a good non-farm payroll data point. Just be aware that we've got this backdrop of COVID-19 cases rising. So at some point, the market's going to be looking to focus in on that. At the moment, risk on, market recovery, good data, vaccine optimism, Fed stimulus, that's the risk on market. So just keep in mind the negativity that's potentially currently in the background at the moment. Okay, guys, I'm just going to be going through to the question and answer session now. We spent a bit of time getting ready for the non-farm payroll release, because that's kind of the big event. And often what the market does in anticipation of these big events, you just start to see the market consolidate. So what we'd expect running into the NFP data, we just expect some further consolidation, and just seeing the market slow down tends to tighten up in tight ranges, because no one wants to start a position now. Yeah, hi Tudor. I've never placed a trade on stocks until yesterday, but in this environment, when we have economic data coming out of the USA, the US dollar can act funny. In this environment, I've seen the US dollar strengthening on good data and sometimes strengthening on bad data due to the safe haven appeal. Yes, Tudor. And because of this, I'm thinking of trading the S&P 500 when we have economic data from the USA in this type of environment. Is that a good approach? Yeah, Tudor, that's not a bad approach at all. Sometimes the S&P 500 futures or S&P 500 stocks can be, a perfectly legitimate way of trading this. Nothing wrong with that at all. And obviously, we are constantly using this in our analysis. So it makes sense to expand the different markets that you're looking at, particularly as you develop and grow as a trader. then you'll naturally want to be trading different markets. And it's a good idea, if you're ever not sure on how, a currency is performing, then you don't want to be sort of trading it until you got that conviction. So in terms of trading the S&P 500 instead, yeah, that's absolutely fine, Tudor. No problem with that at all. Hi, Nicholas. Yeah, thank you. In Icon, within the economic calendar, normally I can access the poll data to show poll distribution. Oh, however, this is not loading in my terminal. Just wondering if anyone else had the same issue. Okay, guys, Nicholas is just asking if anyone else has an issue in their Icon calendar with poll data being viewable. I've asked the question, Nicholas, see if what anyone else says. Mine was fine today. What you might want to do is if you just take a screenshot of this, if you wanted to, Nicholas, just take a screenshot of that. So at least you've got the expectations of what's coming later. I don't know if that helps at all. I'll just hold it up here for a few seconds for you just to grab a screenshot if you wanted to, and then the initial and the continued jobless claims. Otherwise, try and reboot and try again. I often find works wonders, Nicholas. Turn the thing off and try again. I'll see if anyone else pings me a message that they're having trouble with Icon as well, Nicholas. I'll let you know. Hi, James. Would you place a pending order prior to the NFP or wait for the release before trading? In this scenario, James, I definitely wait for the release because there's a lot of volatility that's potentially expecting here. And just look at the, look at all the different data points to analyze at the same time. You've got NFP, got earnings, work week hours, initial claims, jobless claims. You want to have a quick scan through all of those, and the last thing you want to be I would want to be doing is worrying about a pending order that I put 40 or 50 points above the price. So personally, I wouldn't place a pending order here prior to the NFP. I would wait for the release and then make a decision when you can see what the data is saying. I know some people might want to scalp a quick move or just sell into the spike. And there's different strategies that people use. Personally, I want to see the data before making that decision. Hi, Shauna. Hi, Giles. You mentioned if bullish, the euro-US dollar is 1.13. What is the target if it was bearish? Yeah, no, that's fine, Shauna. Yeah, I think if we see a bearish, let's have a look. Yeah. So we've got this near-term support here. So it'd be 1.1200. So that would be the initial target. But once you free up that 1.1200 level, you're moving down to the 1.150, 1.100, and back down to these lower levels, 1.1030. So yeah, so any bearish outlook from the jobs data, then definitely the near-term target here is 1.1200. You've got, you'd expect some profit taking there. Don't forget, you've got these option expiry levels that are still in play. So there's a large one. Whenever the option expiry is above 1 billion, they tend to impact the market. So you've got 1.1250 and 1.1300 here, both of them in play, both over 2 billion. So you can see it's not a coincidence that this option expiry level has contained price this way, and that option expiry level has contained price that way. So price is sandwiched between the option levels. These option expiry levels, they basically operate as support and resistance. They operate as good target levels as well. So, just to be aware of the price action around the data release, just look at these levels. So if that level breaks and then you get a push back to that level, then you potentially that would be potentially a good, if you get a negative reading, Shauna, and say price say price spikes down, 60, 70 points, this would be a potentially good area to short on a negative release, because you've got a 2 billion option expiry level there, it's a recent resistance support level, and then targeting that 1.1200 level. So I hope some of that helps. Oh yeah, sure, Raphael. So you can find the option expiry levels here in the terminal, and you'll just see them reported on. They reported on around sort of 7 a.m.-ish each morning in the terminal. I'll just show you where they are. Let me see where it is. There we go. So there's 727. Here's the big ones. 2.2 billion at 250, 2 billion at 1.113. Okay. So these options expiry levels are option orders that are in the market, and they tend to, for FX traders, they tend to contain prices. They tend to work as support and resistance. They are in play until the New York cut, which is 3 p.m. UK time, okay? And when they're in play, before that, they tend to, you see price react around them. So they're orders to be aware of. Consider them a bit like support and resistance. So there isn't a precise science that I'm aware of in trading these levels. Instead, you want to see how price reacts around them. So like today, we can see that say you were long Euro US dollar and you knew there's not an expiry level up at 1.113, that would be a perfect level to take profit, okay? Similarly, you can see if you had a bias to buy the Euro US dollar upside and price was above the option expiry, you could say, well, this might be a reasonable level to buy because you'd expect some sort of support or some kind of price action battle going on there. Raphael, I hope some of that helps. Oh yeah, Nicholas, Sean is able to see her polls on her icon. So it looks like it might be something with your terminal. Either contact the support guys at Icon or just reboot and try again. Yeah, Tudor's just saying, finding the market very difficult for the past 30 days. So many themes, so much noise. Every time I enter a trade, whether it be long or short, any time, COVID-19, US, China, Brexit, EU stimulus bill, or a new US, I know, and other things can pop their head out. I'm not that experienced or good enough to know when the market will react to a piece of news or when it will brush it aside, as it did even yesterday with the record-breaking COVID cases from the USA. And because of all this, I'm very hesitant and low in confidence in my trading ability. Tudor, don't worry. That is a very normal experience. And I'm finding these markets are very difficult for exactly the same reasons. So many different themes. The market has a proclivity to ignoring the bad news. It's this constant bullish theme that just seems to be underpinned by the Federal Reserve. And it's very challenging times for trading. So I wouldn't worry about that. The thing to remember in these kind of environments is that simple saying that not trading is trading. So when you've got this lack of certainty and lack of conviction, just stay out, observe the market, avoid trading, or just trade very small amounts as you're getting yourself experience, and wait for that high conviction opportunity, because it will come, Tudor. There will be that time when it will just be, yeah, this is one-way traffic. There's Brexit, EU, UK trade deal gets decided and everyone will be buying the pound for about 6 months. The high conviction opportunity will come. Just don't get too chopped up in these kind of indecisive markets. And a number of people are finding these times challenging, and a number of people, huge, big name analysts are, and hedge fund traders and investors are struggling to see how the market has rallied so strongly from the March-inspired COVID-19 lows. So, the market is not making sense to some degree in terms of those big macro themes. Now, day to day, it's just focusing in on those little stories and knowing where we're at. So got jobs data coming out today, and so we should expect some, if we get anything that's unexpected today, negatively, that should see the narratives align, because then the record breaking COVID-19 cases from the US and slowing jobs market, that's risk off. So just stick with it, Tudor. And I feel you. If that helps, I'm feeling your pain. Hi, Yankee. When trading NFP, do you jump straight away if the numbers are good? Would you wait a minute too for algos to play their hand? Often see big jump in one direction, pull back, and then continuation with a minute of the release. Thanks. Yeah, it depends, Yankee. So if the numbers are amazing and it's not going to matter, I just jump in. Otherwise, spend a minute, 60 seconds, 90 seconds, just making sure I've got all my ducks in a row. Yeah, is that good data? And then, entering in a pullback. You can always put a fib retracement level on a spike candle, and you can just enter it, 50%, 61.8% fib retracement level. So entering a retracement is the best, Yanko, because normally you get some kind of retracement. But obviously, if the data is so good, you want to be in quickly. Hi, James. Any data in between the minimum expectations is a sell on the news. There are so many variables today. What you need to see is you need to look at the balance of probabilities, James, and then you need to look at the overall tone. So say you get non-farm payrolls. Let's take a bullish example. Non-farm payrolls. Let's say you get 4 million jobs. Okay, that's positive. Unemployment rate. Let's say it's 12%. Okay, it's not below the minimum expected, but it's still positive. And earnings are up 5.4%. Work week hours are up 34.7%. Like that would be positive, James. Okay, and that would almost be an obvious buy situation. And then just check the jobless claims. What is this still in line? Is that still in line? Just check there isn't, if there's some massive continued jobless claims, above 20 million, and that could just skew the picture a little bit. Now, a sell on the news, then something that would be a sell on the news would be something like, it's hard to say because even if it's positive, any positive number is still positive, isn't it? So I think for a sell, it'd be something like the unemployment rate jumping higher, and if it, say 14% and earnings falling further and year-on-year earnings falling and the work week falling, and something maybe like 1 million or 500,000, something like that would still be a sell in my book. And then you've got the initial and the continued jobless claims to balance up. Obviously, James, you want to look at the market reaction as well. So you can't just be totally ignoring what the market is doing, but look at the data. And if you're making a decision from the data, look, that's a bearish reaction. And then you flick up your chart and you can see, oh, okay, Euro US dollar's just fallen 60 points. You're like, yeah, okay, this is, I'm understanding this data correctly. It's just because there's so many different variables today, James. You've got to have this balance of all the different data points that are being released at the same time. But in terms of priority, NFP number 1, continued jobless claims number 2, initial jobless claims number 3. So that's the order. Most important, NFP. Second important, continued jobless claims. Third important, initial jobless claims. Hi, Sonia. I'd like to scout the US data today for a few minute trade. If I get better than expected data on the US pair, what would be better today? Long Aussie or long Aussie yen and vice versa, short for bad data? Yeah, I would use the Euro US dollar pair. You can also, so if it's better than expected, long Euro US dollar, long Aussie US dollar, long Aussie yen, they're all fine. Long S&P 500 futures, fine. If it's worse than expected, short Euro US dollar, short Aussie US dollar, short Aussie yen, short S&P 500 futures. Hope that helps, Sonia. Yeah, James, that's right. You see, if it's like the timing when to get in immediately is when it's something incredible. So let's give an example. Say there's a Bank of England rate meeting, James, and the Bank of England surprises the market and raises interest rates by 50 basis points. That is a scenario. You don't wait for a pullback there because the pound's going to soar. You get in as quick as you can. say, you know, the scenario when you get in a pullback is like Bank of England rates decision as expected, but the market has taken the Governor Bailey's, you know, press release or report after the interest rate decision as a bullish outlook. So you look for a pullback. So that just comes with experience when it's really, you know, rock solid. So, you know, UK strikes trade deal with the EU, or Johnson and Barnier have great meeting and are optimistic about the future of the two, you know, the two countries getting a great deal before the end of the year. Yeah, buy the pound. Don't wait for the pullback. Hi, sure. I've never traded on NFP before, and today I'm going to attempt it. If there's a huge surge in one direction, roughly how many pips can you look to gain before I should close the trade? So Shauna, look at the Euro-US dollar pair and don't focus on number of pips, just focus on obvious targets, okay? So if it's more bullish than expected, then say the price is more bullish than expected, price shoots up here to 1.1330, okay? Then what I would say is, look, you look for a pullback here to this 1.1300 level, where you know there's an option expiry level, and you know you've got some support, you know you've got the R1 resistance point, and look to play back up there. So that what's that? 330, that's about 30 points, okay? Now, if it shoots down to the, you know, goes down 60, 70 points, or just goes down here to 1.1240 or 50, then you can look to be shorting from back up here towards this 1.1280 region. And you know, in the back of your mind, you've got these option expiry level up here in the R1 resistance point, and then you want to playing back down to this 1.1200 level. So the levels that you've got as your ultimate targets are these levels here above that are marked. Now, if it's even better than expected, say price shoots up to that 1.1400 level, you know, it just keeps going, then you're looking at joining around this level, the 1.1330 level. So each time you get a target that's kind of burst through, that becomes your new launch pad, if that makes sense. Yeah, sure. I hope some of that stuff helps, but don't focus on number of pips. Just focus on like relevant targets. Obviously, we got the ADR highs and lows, which we have marked in to the charts, and that helps us just recognize, you know, where the average daily ranges are as well. So you can see that, look, the average daily ranges are roughly corresponding to those same target levels. So they're going to be key and obvious target levels for profit takers. But then if you get those, you know, if these areas break, then that becomes your new launch pad. So if this breaks even higher, that's your new launch pad. If this breaks even lower, that's your new launch pad. Assuming, of course, that all the data is warranting those moves, okay? Yeah, if NFP release is good, yeah, market carries on risk on. It's risk on at the moment, remember, CTAC, ISM manufacturing PMIs at US week, yes, they were good. Vaccine optimism is good. Fed stimulus hopes, good. Risk on, risk on. The one factor that's risk off is the rising US COVID-19 cases, which, as Tudor was saying, you know, that was quite a big news announcement that the market kind of looked through yesterday. It's looked through it, but it won't look through it forever if it keeps rising, especially. So bear that in mind, that even if the NF release is good and the market goes risk on, and we'll see the Dixie go down, yeah, that's exactly the way we'd look at it. If that does happen, don't forget at some point the market may think, oh, hang on, we're concerned about these US COVID-19 cases, because the market will think, yeah, great, jobs are great now, but hang on, we're heading for a second lockdown. Oh dear. So those jobs number becomes less relevant. That's the dynamic that's going on. Your question's correct. Yeah, Sitak, well done. Yeah, James says, same here, Tudor, you're not alone on that. Were the March lows justified? Well, yeah, a good question, Samar. I think yes. When you consider, you know, when you consider that companies were shutting, there's potential job loss losses ahead. We've got future earnings hit for a number of different companies. Yeah, the market was right to sell off so sharply. The thing that's been supporting the market is the huge amounts of fiscal and monetary policy stimulus from central banks and governments around the world. That's what's keeping the market going. You can see now the risk on tone is carrying on, and the stock market is moving higher on those risk on moves, and that's continuing to support the risk on assets. Hi, Maria. What would you think the outcome would be if, let me just have a look at your question, Maria. NFP comes around 3 million or better. So if you get 3 million or better, so that's on expectations and above, but continued claims rise. The continued claims rise, yeah, that would be worrying in my mind, Maria, because if the continued jobless claims is rising, like if it's above that 19.4 maximum expectation, and then I'll be looking at the unemployment rate. So if that's rising, and if that's rising, that will kind of be a more, you know, you'd have to dig into more of the detail, but it certainly be more, in my mind, that would be neutral to negative, particularly considering the rising COVID-19 cases out of the US. So that's how I'd be looking at that. For what it's worth, the whisper number I read on Bloomberg today from the Bloomberg terminal is 2.8 million. So that's the whisper number for what the jobs number is today. Yeah, okay, that's great. Well, okay, I'm just seeing if there's any more questions. I got a question just on from Daniel. Daniel, this non-farm payroll data is part of Icon and Zenith, and that's a subscription service. Yeah. Okay. Well, that is all that we've got for today. Yeah, you're welcome, Maria. Okay, question for CTAC. Best way to trade NFP is, I think the best way to trade NFP is something more liquid. So like a Euro US dollar pair, S&P 500 futures market, something like that. Australian dollar US dollar pair. Other thing, you can buy Euro Yen. Yeah, because Euro Yen, you're going to have the Euro being supported by the rising Euro US dollar pair. We know Dixie 60% Euro. Yeah, exactly. And we can buy and risk on move with Euro. CTAC, that's absolutely fine. Euro Yen would make sense as well for a better than expected release. Guys, I hope you have a good trading session. I look forward to hearing how you guys get on. I will be back here Monday for the usual look ahead. I hope you guys will have a good session, and thanks for good questions and good interaction as always. And I wish you all the best for the non-farm payroll session ahead. Thanks, guys. Goodbye. Oh, just seeing your question, Shauna, is there a whisper number often? Sometimes, you get rumors of a whisper number. It's not always correct, but I just said it for what it's worth, Shauna. Thanks now, guys. Goodbye.